What is one of the biggest differences between an amateur trader who is consistently seeing red numbers every time he clicks the buy and sell button and consistently seeing his account diminish versus a professional trader who's making consistent returns and consistent gains? Well, one of those biggest differences is a professional trader has the ability to stay ahead of the market. And in today's video, what I want to do is give you the 3-step process that I personally use to consistently stay ahead of any market. I truly believe that this 3-step process will help you to become a ninja at trading whatever specific market you're interested in. This type of analysis is going to work whether you're in the Forex market, the stock market, cryptocurrency, options. It does not matter. If it has a chart, then this is how you stay ahead. And this is how you stay prepared for any situation that market's going to throw at you. I'm going to teach you this today specifically by breaking down the top 5 Forex pairs and teaching you along the way the exact way that I'm breaking down each of these charts. So if that sounds interesting to you, make sure you go ahead and click that like button for me. Hit the subscribe button down below the video to the right hand side and the notification bell. Follow us over on Instagram at The Trading Channel, and I will see you directly after the intro and disclaimer roll. Welcome back, traders. So we're going to start today's video off by breaking down the euro dollar. Before I do, let's discuss the 3-step process I use in this top-down analysis in order to break down any chart that I'm looking at and predict with a high degree of accuracy what's likely to happen next with that chart. Now, that doesn't mean that I have 100% accuracy at predicting this or that I have trades out of these zones of structure based on this trend 100% of the time. Sometimes I don't get an entry reason that I don't have a trade. Sometimes the trade loses. This just gives me an edge or an advantage. It's just something that I have come to use day to day in my trading to help me make more accurate trading decisions. And I hope it can do the same for you. The 3-step process consists of going to your higher time frame. For me, it's a daily chart because I trade on the 4-hour and 1-hour. Go to that higher time frame, and the very first step is to figure out the trend of that higher time frame. In this specific case, on the euro dollar, what is our trend? Well, our trend is definitely up, right? We're making new higher highs, higher lows, higher highs, higher lows. That being the case, if I know that I'm in an uptrend, I'm ready to move on to number 2. I've tackled that already. Let's move on to number 2. Number 2, I want to find major levels of structure. Now, listen to me for a second, because I'm not just talking about regular support and resistance. No, I want the perfect trend continuation level, and I want the perfect, what I call, barrier level. What's a barrier level? Our barrier levels are going to be levels above price that the euro dollar, if it continues in this uptrend, is likely to use to either pause and pull back or as a possible place it's going to reverse. Those are barrier levels. But the first one we're going to talk about is trend continuation levels. If I zoom this chart in, and we're looking at recent levels right now, the most recent levels tested by price, what can you see as a trend continuation level on the euro dollar? Well, I'll point out what I see. I see this right here. This zone, to me, is going to be my first possible trend continuation level. Now, you may be asking, Stephen, why didn't you use this zone right here? Well, because this bottom zone is way too close to it. My luck, and most traders' luck, unfortunately, is that we place trades in this first zone of support, right? So we have our entry right here. Our stop loss on a lower time frame is going to be about right here. And we have our target back up at resistance. That would be like a normal trade situation, right? This is our stop. Well, the market, more than likely, if you do that, is going to end up pushing down and retesting these lows. When it does that, it's going to hit your stop loss, then turn around and do exactly what you thought it was going to do. So that's the reason. If you have been through that before, please leave a comment. Let other traders know they're not alone. I hope I'm not alone, because I know I've been through that a lot. But that's the reason I'm not looking at this level at all. What I want to see is and not even what I want to see, but if I don't care if it goes up or down. Right now, I'm not in a trade, and I'm going to prepare myself to place a trade. So I'm not going to place a trade right now just because I want to be in a trade. What I want to see, or what could happen, is this market could push down. If this market does push down, this area is an area I'll look for possible long trades, okay? Now, that's step number 2, is finding your zones. I like to point out 2 trend continuation zones. The next zone I see is right down here in between these 2 levels. And I want to talk about something really quickly. The reason I'm not zooming the chart out and looking at every one of these levels is, one, because it would cluster my chart up like crazy. And two, because for me, those are not as important of levels. For trend continuation, I'm looking at recent levels in price. This one was made back in March. This one was made right in June. Other than that, I don't really have any other levels to look at unless I scroll the chart back all the way to December 20 and then 2019, somewhere around August. Like that's not what I'm going to be doing. I'm looking for recent levels for trend continuation. Now for barrier levels, sometimes we have to scroll the chart back a large amount. So for a barrier level, remember right now we're just looking at structure levels. This is step 2. What do you think our barrier level would be? Would this be a barrier level? I hope you said no. And the reason is because I know this is a level of resistance. No doubt it is. But we're currently in what type of trend? It's an uptrend, right? And if we're in an uptrend, what has to happen? We have to break into new structure highs. So if this is our previous high, then if we're going to continue in this trend, which is a likely scenario until the market shows us something different, then we are inevitably going to break this high. Therefore, I'm not going to be looking at this high as a barrier level to push the market down. I'm looking at the levels above that high. So that's an explanation as to why I'm not looking here for short trades or even looking at it as a level this market might run into trouble at. Instead, I'm going to move the chart out, place a horizontal line on my highs right there. There's my highs, right? So I'm going to scroll the chart out from there and look for the next level I think this market could have trouble. It's a pretty obvious level for me, somewhere in here. And the next level up might look something like this and then this. So with that being the case, I now have my structure levels pointed out. So that's my barrier levels, right? I know that this market's in an uptrend. That was my step number 1. My step number 2 was to define my structure levels. I want to see the trend continuation levels, and I want to see the barrier levels that if the euro dollar continues in trend, these are the likely areas we're going to see pullbacks, maybe possible reversals out of the euro dollar. That being the case, I now have those 2 steps finished. What's step number 3? Step number 3 is to prepare. A lot of traders run into the issue where they don't prepare. Instead, they just want to be in a trade all the time. I discussed this in yesterday's video or the last video I did, but it's so important to be prepared and wait for the stars to align. Don't place a trade because the market's right here. Instead, wait for this market to get into your perfect trading zone and give you a perfect trading entry. So, with that breakdown and giving you a quick example of the 3-step process, we're looking for trend, structure, and then we're preparing for whatever the market does. Don't be the trader that goes, the market's in an uptrend, so it's going to stay in an uptrend, I'm going to buy. Be the trader that's prepared. That means being ahead, right? If you're a football coach and you are staying ahead of the other team, what was the reason behind that? It was because you were more prepared than them. So you want to stay more prepared. You want to stay prepared, which means you're staying ahead of the market. This way, with all of this figured out, this whole 3-step process complete, you now know exactly what you're going to do if the market pushes down. If the market pushes down, you're going to be waiting on long opportunities from here if you're using this type of analysis. You know what you're going to do if the market breaks that level. It was a major level of support, so it could become resistance. You know you could possibly look for short trades there. And if it heads lower, you know exactly what you're going to do. Long trades from this area. If we end up pushing up from here, you know where you're going to look for possible counter trend trades. You know where, if the market breaks this level, you'll look for possible long trades. This gives you, you're so far ahead of the market in this case that you're acting like a pro trader. You're no longer being the trader that's pressing the button and constantly seeing red numbers, because now you're staying ahead. And we're going to go through the rest of the pairs rather quickly. I just wanted to explain all of that to you, but now you know what I'm looking for here on the euro dollar. Let's go ahead and take a look at the pound dollar now. And we'll talk about everything I'm expecting out of that pair based on the same form of analysis. Let's start off with a blank chart. And in the same exact way we just did, let's talk about what trend this market's in. Well, we're definitely in an overall uptrend. We do have a small close below our previous lows. And I'll do a horizontal line to make that easier to see. Right there's our previous lower low. And we're right at that lower low. So we don't have a close below yet from that lower low. But what would we be looking for? After we've decided about trend, remember, we got trend, next up is what? Well, in this case, we are right around an area of possible support, being our previous support level. This area could possibly act as support, pushing this market higher. So we know that. We've now identified trend as being overall in an uptrend. We've identified our trend continuation level. What are we going to do? One more trend continuation level. which for me is going to be right in this area because, let me explain the reason why. It's the latest level of resistance that could turn to support. It also has been tested multiple times, okay? Since I have that, I'm seeing this level as a major level of structure that if the pound dollar gets down to, so if we break down further, I'll be looking here for possible long trades. This level could possibly hold, and this level is a place I would look for long trades as well. If we can pop up out of it and get a retracement back to it, I'll be looking for long trades inside of 1.3045, between that and 1.2982. In terms of our levels, we're looking at for resistance or our barrier levels. What are we looking at? Well, we do have our previous resistance, but remember, we're in an uptrend, and if we're in an uptrend, it's likely that the market's going to continue higher, right? If that's still the likelihood and the market hasn't proven it's going to push lower, then what I'm going to be doing is placing my horizontal line here at the highs and then looking left to see what my next level of trouble will be. The next level of trouble that I see is right in here and right in here. We have our major resistance here, popped above it, went right back below it there, and this major support level. So those are my barrier levels. In between that, we can use this as a little one because it is a barrier level that was tested 3 times. We have resistance, resistance, and resistance. So that would be a barrier level as well. I'll change it to a black dotted line so it doesn't get confusing. Hopefully it's not. And there we go. Those are our barrier levels, meaning that if the pound dollar continues in trend, breaks into new highs, then these are the levels I'm expecting possible reversals or pullbacks from. So now I'm prepared, right? As a trader, as I just told you, the plan is on the pound dollar, me making a plan, preparing, staying ahead of the market, is that if the pound dollar pops out of this zone, I'll wait for a possible entry reason if we pop back into this zone. That's one version of what might happen. Preparing for all these different scenarios is part of being a professional trader. So if the pound dollar pushes down, breaks below this low and closes below this one, then I'll be looking here for possible short trades. And I'll be looking for those short trades until we get down to our next level of major support between 1.278, 1.2711. It's an area I'll be looking for possible long trades. The other scenario we are prepared for is that if this market pushes higher and ends up close to 1.3974, 1.3597, sorry, I knew that sounded weird, I'll be looking for possible short trades and a bounce until we get up to around 1.37 and another area of resistance or a barrier level of structure that I am prepared for the market to take some pullbacks from or possibly even reverse. So that's what I'm looking at in terms of top-down analysis on the pound dollar. Let's take a look now at the Aussie dollar. Again, a blank chart. And here we have it. What kind of trend are we in? Very similar to the last 2 charts. We are overall in an uptrend. We're in this uptrend until we break and close below this low. So with that being the case, we're still in an uptrend. What's our next step? If we know we're in an uptrend, we're looking for what? We're looking for trend continuation levels. I hope you said it before I did. Trend continuation levels. In this case, remember what we talked about on the euro dollar? This is the lowest low the market could get to. So do I want to be placing trades from this area, and this area? No, I'm going to make myself a little zone here towards the bottom of this area because I know it's kind of likely if this market's going to continue pushing down and pulling back that we're going to reach close to these lows. That's the only time I really have an advantage in terms of placing a long trade. So with that being the case, that's what I'm going to be waiting on. Our first zone is right in here, which ironically lines up with the previous level of resistance. So that's nice as well. We have 1, 2, 3 tests here. After that, the next level of support I'll be paying attention to right in here. So now I've played, you see how easy this is? Once you have this 3-step process, you go trend, okay? Trend continuation, structure levels, cool. Barrier levels, not this high, right? Because we're in trend continuation. Inevitably, we have to pass this high to continue in this overall uptrend. So I have to find my barrier levels above 0.7415. Scrolling the chart out, you can see that we have a level of resistance right in here. So that's one barrier level. The next level is going to be right here. So those are my barrier levels. Go ahead and delete this. I now have my barrier levels and my trend continuation levels I can prepare. My preparation goes a little like this. On the Aussie dollar, if I'm choosing to trade nothing but top-down analysis and only use this, It's important to note I have multiple strategies that I use. Some of them don't even require top-down analysis. But whenever I'm trading in this way, the way I'm teaching you in this video, the only time I'll place trades on the Aussie dollar, on this specific currency pair, is if this market pulls down into my first trend continuation zone. Or if the market pulls down, breaks below that zone, pulls back up to it, I'll take a possible short from here. I'll take a possible buy. I'll take a possible short from here. And then I'll take a final buy from here. It's the only times I'm trading unless we head higher, break into the rest of this uptrend, break into new highs. And if we break into those new highs, I'll be looking for short trades, counter trend trades at my barrier levels. And as the market passes those levels, I'll be looking back here for possible long trades at previous resistance, possible long trades at previous resistance. And if we get back up to my final barrier level, I'll be looking there for possible resistance and counter trend trades. I'm prepared completely for whatever this Aussie dollar pair does. This is what is called staying ahead of the market. And this is the reason professional traders are consistently ahead and making money, is because they do analysis just like this. I don't know if they have their own 3-step process, but I imagine they do. I like to break it down into the most simple format, not only so I can teach it to you guys easier, but because it helps me. I'm not the smartest person in the room 95% of the time. So it helps me to break things down in the most simple forms. So now let's take a look at the dollar yen. I was doing some day trading on this pair. Let me delete everything. All right, so here, what do we have? What kind of trend are we in? Downtrend, uptrend, your guess is as good as mine. This is consolidation is the reason I'm saying that. We do have lower lows, lower highs here. So most recently, even though we have this bit of consolidation where we had this 1, 2, 3 move up, most recently, let's say we are in a downtrend. So if we're in a downtrend most recently, we know that we have that determined. Number 1, downtrend. So after the downtrend, now what do we need to find? Well, we need to find our trend continuation levels. If we're in a downtrend, what's going to be the levels of continuation that we're looking for? Well, it's levels of resistance. The first one I see is right here. So this level of resistance, if this market heads higher, is going to be a level that I'm paying attention to for possible short trades. Okay, there's my trend continuation level. What's the next level? It's one of the most obvious ones you can see. It's going to be right at these two highs back here. That's my trend continuation. What about barrier levels? If this market's going to push lower, inevitably we have to cross this level. Now, since we've had a 1, 2, 3 move here, I don't want this to confuse anybody, but because of this 1, 2, 3 move I just pointed out, I'll point it out again. 1, 2, 3. Because of that, I actually will use this as a barrier level. Don't get confused about that. You don't have to use this. It's just a more advanced technique that I personally use. So for a barrier level, we have 1, and the next one is super obvious right there. So now I have my barrier levels. Now I have my trend continuation levels. I will not trade the dollar yen unless it pulls up to this area. Again, in terms of using this exact strategy, unless it comes up to this level, then I'll look for short trades. If it breaks this level, pulls back, I'll look for buy trades. If it breaks that level, pulls up, I'll look for short trades, okay? I'm super prepared in the version of the world when the dollar yen moves up and keeps going higher. Now I'm prepared for that. If the dollar yen continues down, I'll look here for possible long trades. If it breaks through, I'll look here for possible short trades. We have buys, short. If we keep pushing down, we have another situation where I'll look for buys. So that's a breakdown of the dollar yen and what I'm looking at on that specific currency pair. The last pair we're going to take a look at is the dollar Swiss. Let's go ahead and delete everything yet again. All right, and on the dollar Swiss. If you can't see this trend, you might want to start at the very beginning. This trend is for sure pushing lower. We have this heavy downtrend right now on the dollar Swiss. So with that being the case, number 1 is knocked out of the way. I know I'm in a downtrend. What's the second thing I'm going to be doing? Well, it's going to be looking for trend continuation levels. One of those is going to be right here because we have a level of resistance and a level of support right back here. So I can draw that in. I know that's my trend continuation level. What's the next one that you see that stands out to you? For me, it's right here. We have this level. So these two levels are my trend continuation levels. If the market's going to continue lower, then we'll pull into these levels and push lower, okay? My preparation is now, if this market heads higher and gets to my level between 0.9258 and 0.9213, I look for possible short trades. If we break above it and pull back, I look for possible buy trades. If we break above it to my next trend continuation zone, I'll look for short trades to push this market lower. Now, what's the next step? I have my trend continuation zones. Now I have to look for my possible barrier levels. So what's my barrier levels going to be? Well, now I have to put a horizontal line at my lows, because this inevitably will be broken if we go into continuing this downtrend, right? So after that, I have to scroll the chart back quite a ways at this point. And the next level that I really see that's going to be a barrier level is right there. And since we have this one being so low, I'm going to look back a little bit further than usual for my barrier levels and use this level as well. So now I have my two barrier levels mapped out. I just talked about what I'll do if this market continues higher. What do you think I'm going to do if it continues lower? So if we don't get a push up into my zone here, what do you think is going to happen? Well, that would mean that we continued lower, right? And if we do, I'll be looking at this zone for possible short trades after breaking and closing below, and continuing until we get down to 0.8727, where I'll look for possible counter trend buys. And if we break down below that, I'll look for possible counter trend buys from 0.8589. And that's the way I break down each and every chart that I look at when using top-down analysis. That's my analysis on the top 5 major pairs. I hope you enjoyed it. Click the like button if you did. Comment below if you have any other things that you're struggling with in trading. I'll try to add them to the next videos. Also, comment below and let me know if you want me to do videos like this each and every week, breaking down the top 5 major pairs. If you're interested in some more advanced training, we do have the EAP training program where I go through each and every one of the strategies that I use on a daily basis in a full training course. Included in that course is also a heavy amount of training on risk management and discipline. And you will also be receiving 3 to 5 alerts of trades that I'm taking based on the strategies you learn in the EAP. It's also a personal mentorship program. So any email that you send to us that is trading related, it will be me personally responding to you and helping you grow as fast as possible on your journey to becoming a profitable trader. So if you're interested in that, go ahead and click the button down below the video. It's labeled EAP. It's in the description. If not, that's totally fine too. Click the like button. Make sure you're subscribed so that you stay alerted about this free, valuable content we come out with. Hope you have a great rest of your week. Hope you trade green, and I'll talk to you very soon. See ya.